What is up, guys? Welcome to another live session. Today is December 9th. Jesus. December 9th, 2019. And we're back again on the charts for another live session. I'm back from my trip. Just want to thank George for holding it down while I was gone. And I think I came back at a good time because this might be the kind of last week where we'll be able to trade before the markets calm down for the holidays. And so we're on the start of the second week of December, and this week is pretty important for all pairs, but mostly the pound, the euro, and the dollar, because this week we have the ECB, the FOMC rate decision, and obviously the UK election on Thursday. So we're just going to look at the quick economic schedule, just take a quick peek. It's going to be pretty quiet for Monday and Tuesday, but going into Wednesday, we're going to have some major stuff come in, and that's the CPI data for the dollar, and then the federal rate statement at around 3 p.m. It's looking like they're going to keep the rates the same as it was before, so right below 1.75%. But who knows? Trump always has surprises up his sleeve. And we have Thursday, we have the ECB statement. So they're also looking to keep rates low right now. Obviously, both two economies are kind of struggling, the euro and the dollar, even though NFP was amazing last week for the dollar. And then Friday, we have some core retail sales. But Thursday, we have the UK election during the day. So I would really just be not in any trades at all. It doesn't just have to be the pound. I'm pretty sure the euro will get affected. It's a lot of unexpected things could happen. So Friday, you definitely don't want to be in trades. And even Wednesday, for that matter, it's going to be pretty hard to kind of predict these kind of releases. But we'll see what we can get. Usually we have a pretty good track record of holding trades during news because our technical is kind of aligned with the fundamentals, but no one can really predict an election. So we'll probably sit out Thursday and just spectate, because a lot of accounts will be blown with that volatility. So with that being said, I did miss you guys. Hope you guys missed me. And without further ado, we'll look at the pound dollar. So the last time we traded the pound dollar, we had a intraday long setup, which played out pretty nicely. Very little drawdown. Quick 65 pips. Right to our previous resistance. And since then, if we look at recent price action, it broke this previous resistance level, came back, retested it, and has made a pretty good rally. And so it's conquered two trend lines. So actually one major one, and that's on the monthly time frame. So back when we wanted to long the pound, we did have a target of 1.31500, and we're currently resting at that point. But if you go to the monthly time frame, you can see this trend line come into place. This trend line started way back in 2014. We had our next touch at the start of the year, and at the end of the year, we finally made another rally to our touch. And if we look at the monthly candle, we have closed above it, and even on the weekly time frame. So the pound is looking in good spirits, and that's probably with the Brexit election coming into play, and Tories getting that huge initial lead. So a lot of speculation is driving the pound right now. Obviously, it did come off some support, but much of this move is based on what's going to happen on Thursday, or what's expected to happen. Obviously, we don't want to trade this, but I just thought it was nice to look at, since this was a level we were spotting for some time now. If you remember back in this previous bull run, we were waiting for that closure above 1.30,000 to go higher to 1.31500. We didn't get that for like a whole month until last week. We finally got that push, and we're kind of just chilling at that level. So on Thursday, we could either have a fall down here, or just a huge push to the upside. If we're going to the upside, some targets to look at for is 1.35,000, and then maybe 1.36 440. So I'm just going to plot those levels down, see what happens at the end of Thursday and on Friday's free session. So Right, these are my two targets for Brexit. If if it's bullish, in terms of if it's bearish, obviously this level right here, 1.30,000 is important, and the next one would probably be 1.27980. So, pound, not really gonna be looking to trade this, but we will be looking to trade maybe euro and gold. Currently they're retracing, which is fine because we're looking for entries to continue going lower. So the daily looks kind of bearish right now. Obviously this candle, this daily candle will tell the tale, but the 4 hour is kind of looking a little suspect just because we're bouncing from hourly support. We could make another rally back to these highs, but for our shorts we just want this closure below this previous swing low that we've created. So we had the down push, and if you watch the Fibonacci video I did, we're trying to trade those levels and get the next retracement down. So we'll actually plot a fib just to see if we're at a crucial retracement point, and currently at the 0.50 fib level. So definitely, if there was going to be a push down, it'd be now. It might happen at the 60, the 61.8, but it usually occurs at least at the 50 point mark. So if it doesn't happen here, then we might just have shorts off the table and maybe look for intraday longs. And the intraday long we can target for EURUSD is this one right here. Something like this. Obviously this level is kind of key right now, so 1.11100 would be a nice target level. But we'll see currently on the 4 hour time frame. If this 4 hour candle does flick back up somewhere here, then we'll definitely enter long for an intraday setup. I'm not really looking at entering any swings. As I've said, Wednesday and Thursday and even Friday are pretty news intense, and we have the UK election on Thursday, so do not hold anything because your account can get blown. But this is the potential long setup we have for euro, and it's a 2.0 risk reward setup like much of our setups. So definitely something you want to look forward to, and I will give you guys a moment to plot this chart down 1.11100 and look for some sort of closure, bullish closure above 1.10750. Obviously this current 4 hour candle is not bullish, and you can have stops right at 1.10592. So that'll be the first setup of the week we're retargeting. The other one is gold. So on Friday, NFP drove gold down. I think the U.S. economy added 300,000 jobs, and Canada lost 77,000 jobs. So that's Trudeau versus Trump right there for you. Let's actually look at the actual numbers, and I think unemployment went to a 50-year low for the U.S. economy. So pretty good for them. And yeah, 266K, 3.5% unemployment. It was obviously 3.6 in the past month. So we're looking to take advantage of the dollar strength amidst the whole Brexit drama. We're looking for some sort of retrace on gold, which we did get. We got that initial push on NFP, retrace to 1465, and we're coming down. So all I want, just to confirm our short for this trade, is just looking at some sort of closure below this hourly support we've created right here. So 1459. If we can get a bearish closure below, we extend this over, we can see it's been a nice swing low area for gold. A closure below 1459 would probably take us a dive to 1452. 70 pips for an intraday setup would be pretty decent. And who knows, maybe Wednesday's CPI data might be the catalyst for this move. But something like this is something you can look out for. Obviously, further, if CPI data is better than expected, then we can go all the way to 1448, which was one of our previous targets. So just look for that bearish closure below 1459. Don't use a sell stop, but your entry should be around 1457, 1458. Stops right at 1461. Let's make it actually a bit better than that, just to give it some breathing room. Stop should be 1462, and this is a 3.2 risk reward setup. So we are looking to take advantage of dollar strength, but euro might present a kind of an intraday long before we can short gold. So that's 2 setups right there. I'm gonna take a quick peek at the chat. Anyone has any questions, pair recommendations, let me know. For those that are on YouTube, we do have hey guys, hey Will, hey Metre, if Labor is elected, short it to 0. Okay, that's cool. Yeah, if you guys have any pair recommendations, let us know. And for those that are on on YouTube watching this, I do want to take a second just to talk about our portal. This is our portal right here, what you're looking at. Whoops. This right here, we have a beautiful chat which anyone can use, and then we have all our past sessions here, and we also have some trading view charts you can pull up as I go live. So if you click this New York live session, you will see my live session if you click the play button, and you can draw as I go live. If you want to sign up for our free trading room or want to take advantage of all the services, you can just go to forexlens.com/forex-trading-room, and you can sign up for free access. So that's Monday and Friday sessions. If you want all the sessions with me, Monday through Friday, and all of our signals, sign up here, get full access, and I'll give you guys a 25% off coupon code at the end of the session. So stay tuned for that. And so gold is done with. Let's see how this goes, and hopefully we get this trade entered before Wednesday. Another setup we have is USD yen. So the safe havens are going to take a kind of momentary break as this week kind of calms down, but we can see there's a potential to long from this level 108.434, and we've done this in the past. When we short gold, we tend to buy USD yen. They're pretty much one-to-one inverses. So if we're getting a nice short setup for gold, why don't we take advantage of a long on USD yen? And so just taking a look at the 4-hour time frame, we can see how important this level is. Obviously major activity here, and all the way back to the start of October. So for me to go long, I do want this 4-hour candle to close a bit more bullish than this. Right now it's okay, but we want a better confluence. If it closes the way it is, we can still enter long, targeting the upper part of our range right at 109.100, and with a very tight stop loss at 108.327. So our stop loss will be around 30 pips, and our overall target would be 50-ish pips, so 1.73, which is not bad. And there's a potential to go even higher, but in terms of intraday targets, we're targeting that. So we have a few setups around 60 pips each, so we could be up 180 by the end of Tuesday. And so a quick look at the charts. It's the first time looking in a week and a half, but this is what I see so far for at least the majors. We'll take a quick peek at the minors. If anyone has any pair recommendations, let me know now, because the next chance you'll get for the free guys is on Friday. So CAD CHF, we'll take a quick peek. Any view on crude oil? So we'll look at crude oil actually. We gave a short setup last week before I left, and that ended up hitting its final take profit, or very close to. Let me just take a peek. Oh, okay, so it did hit our final take profit. Wow, pretty much in one whole candle. This is a 4-hour candle that just took us straight to the bank, really. This was because the bad Canadian data that came out, and very little drawdown. So taking a peek at crude oil, still respecting the initial levels we drew in our past live session, and that level is 58.81 per barrel. And so we had the short from that level last week, right to our final take profit, and since then we've rebounded, and we've actually closed above it, and we're looking pretty bullish right now. We're currently printing a hammer on this 58.81 per barrel. So there may be a potential to go long, and when we want to go long or even short, we look to the left for levels that we can target. And obviously one level is these highs right here, and if we look at these highs, were a previous support. So a near-term level for any long on crude oil would probably be 60.83 per barrel. which is around 200 pips away. So you know, there is a chance to go higher like we did in the past, but a nice safe clean target would be 60.83. And so I'm gonna get rid of the short setup since it's done with, and we'll show you the long. Just a word of caution, I would not advise anyone with a small account to enter crude oil or even gold for that matter. Just gonna, one loss on any gold or crude trade could do serious damage to your equity, so just take note of that. But a very solid setup, and our stop loss could be even tighter, but as it stands, this is a 2.5 risk reward setup long on crude oil to 60.83, and our stop would be at 58.29. An entry would be right now. I do want to say right now. I just want to take a peek at the 4 hour. So yeah, thank God I did take a look at the 4 hour. The entry is not now because you can see we've kind of you know, this is the level we were talking about, the resistance 58.83. And we did get that closure above, but obviously it wasn't bullish. You can see a very huge wick to the top side. You can see price come back below resistance. So this could be a classic fake out. You know, a lot of buyers probably came in here and probably got stopped out right now. So what we want to do is our bread and butter, the break, retest, rejection. So we did have that break. This will be our retest. Our rejection would be a candle that closes above these highs, and the high in particular is probably going to be right here. So any closure above 59.22, bullish closure for that fact, will take us probably higher to 60.83. So we're actually going to move this up here and have our stop loss. It's actually in a good place right now. So this would be the setup in question, and maybe we might have it by Wednesday, but if not, Wednesday's CPI data and actual rate decision will be the catalyst for this move. But just taking a quick peek at the risk reward, it's still 2.0, so not bad, but we will wait for that break, retest, rejection. And this is one of the reasons why we do a top-down analysis, because you can never be too sure, just going based off the daily. So let me squeeze this down. And yeah, so that's crude oil for Imran, whoever asked that. Hope that helps you out. We'll take a quick look at Bitcoin, and if anyone has any questions after that, let me know. After we look at Bitcoin, I'll share the 25% off coupon code on the charts here, so you can take advantage, get 25% off your first month. So we're kind of making a routine to look at Bitcoin, so we'll do that. And what was it with Coinbase? Oh yes, it was. So damn, Bitcoin really didn't do much when I was gone. So our last short was here. Let me actually move these fib levels. Don't need them right now. And these two arrows kind of represent our targets. So our last free session was on a Friday, and this is when Bitcoin closed back above 7,500. And you know, I was thinking Bitcoin could be, you know, annoying and retrace all the way back to 8,700 if it wanted to, but it kind of did not do that. And I think that was because of the data, the beneficial data for the US economy, so it brought that down, and currently it's just resting on 7,500. And I don't really like this, because with commodities like gold, crude, and silver, and now Bitcoin, when they tend to rest and at key levels for a very long time, they're usually due for an impulse move in either direction. So for a short idea to continue shorting down, if Bitcoin closes back below 7,200, I do see us going back to our target of 6,000. So just look for this move to happen. I do think the annoying push to 8,700 is on hold right now, as it failed to go higher on these past two rallies. So that's a quick look at Bitcoin. 6,000 is probably the target. Just need to close below 7,200. With that being said, I'm going to take a quick peek at both chats and see if everyone's good. Oil has been covered, Marco. Take a quick peek at YouTube. View on gold. So we did cover gold. I'll quickly go over that one more time. So for gold, we kind of have a short bear bias just from the daily time frame and the NFP results. But in short, the setup we're looking for is this one right here. We want a bearish closure. Obviously, what I mean by bearish closure is a candle like this right here. This candle right here is not a bearish closure. You can see it's a hammer, a very long wick to the bottom. And if you look at this candle, after this candle, we had a bull rally. So we want a fat bearish candle with very little wick to the bottom. And we want that candle to appear below 1459. You know, around 1459. So look at 1457 or 58 as a target region for a bearish closure. And that could take us all the way down to 1448 with a first take profit at 1456 and then 1452. And just take profits every 25 to 30 pips. But if there's a setup, I'll call it on my Telegram, which is free to get my Telegram. It's t.me/rp Forex. Very simple. And you can get all my signals for free there. So that's gold. And with that being said, I'm going to give the 25% off coupon code for those that do want to join all of our sessions and get all of our signals. We have 5 signal providers with me included, and you get all our sessions in our beautiful trading room. Just use the coupon code 25, that's 25, capital O, capital F, at forexlens.com. forexlens.com/trading room. Oh, actually this one right here. Do a refresh. This right here, forexlens.com/forex-trading-room / and click get full access for 97, and then you can apply the coupon code at checkout. So with that being said, I will see all the free users on Friday for our Friday session. I'll see all the paid members tomorrow. This was another great live session. Hope you guys be safe this week because it's going to be pretty intense. And I'm RP Forex. I'm logging off. Have a great day.